Welcome to the Foundation for the Study of Cycles. My name is Lars von Thienen, and today we run our weekly cycle analysis session. So we meet every Monday, same time, same place. If you're new to this channel, what we are doing here, we will use our digital signal processing tools with the app which members of the Foundation for the Study can use to analyze market behavior, current market data, to learn something about how to use cycle analysis to analyze and approach global markets. That's the purpose. This session for today is not live, so I've pre-recorded this session because I'm on travel this Monday while you're watching. But next week we will live again. And we have a special guest next week, Monday. Peter Iliadis will be with us. So save the date for next week, Monday, the 13th of December. This will be a very interesting and important session to discuss with Peter his analysis on market cycles and to combine this with different time cycle-based works. So what's the purpose for today? Today I will expand a little bit on the session we did last week. So last week I talked about how to use cycle length information to tune technical indicators on the example of Bitcoin. And as this idea has received a lot of attention, and it looks like that this concept is not so well known out there, so and it is very important. So I will use this session today to review this concept again, just on another market. So today we will look at the tech index, so the NASDAQ index, and review last year's price action and see how the cyclic information could help us to improve our technical analysis skills on the price chart. So that's the key purpose for today, and I will use the NASDAQ for this example. So first, let's move into our cycle application here. So what we're seeing here is the NASDAQ just loaded into our cycle analysis application. And before I will start with the cycle analysis, I want to highlight some major important topics about the price behavior we have here on this chart. First of all, at least if we start here at the low in 2020, we can see that this is more or less, so this is more or less, let's start just here, a simple straight up moving market, right? So there is no cycle visible here, right? So the full year since 2020 and up to the end of 2021, so more or less now 2 years, approximately 2 years, we saw a straight up move. It's more constant line up moving here on the daily chart for the tech index here. So said that, you know that if you have watched this cycle analysis during the last year, I've reviewed the global market indices from time to time, and if you look on the S&P or other different markets, they all look similar to what we're seeing here on the NASDAQ, but let's use this for an example. And so on the daily chart, we would have not received very important turning points in regards to time cycles based on this chart. Yeah, we could, if we have switched to a much lower time chart, so if we analyze 2 hour or 4 hour chart, but that's not the main purpose we're doing here. So just from the daily cycles, there are no real cycles active, or at least the trend component, which we're seeing here, has a much higher strength and is overruling all daily cycles, so that the trend we still have ongoing here on the NASDAQ is much stronger than the daily cycles. So, I mean, you always know this after the fact, but that's the purpose why in these trending markets you need to carefully pay attention to the cycle analysis. I have repeated this a lot of times in the past. So, but Does this mean cycles can't help us here? No, cycles can help us here. And that's the purpose why I'm focusing today on this special topic here. So if you have this kind of period, for sure, the digital signal processing will squeeze out cycles which act here. So, and that's the first topic you need to have in mind. If you have such a strong trend, I mean, you could, the engine is detrending, yeah, so it's taking out the trend. But even then, the smaller cycles you might detect with digital signal processing, if the trend stays intact, even these very small cycles are not, at least not really tradable on this strong uptrend here. So you might have the chance going on weekly or monthly charts to detect the weekly and monthly cycles, which seems to be in force here and have a much stronger impact than the daily cycles. So that's the purpose. You need to have a clue on different time frames and different cycles on different time frames. And but that's not the purpose for today. The key topic I want to talk of you, even though there is a way how cycles can help us here. And let's get back to this point. So you know that the let's go to a period before this strong uptrend here, right? So somewhere here in, or before the low of 2020, after this strong uptrend here started. So let's align our analysis ending point here at this time here. And then I always say use 3 to 4 years of data for your analysis. So let's align the starting point here and let's refresh the analysis. So now the dark blue is used for our analysis. We have 1000 bars. This is 3 to 4 years of data which is used here. We have some swings here in this data set, so that's okay. And we don't have the strong up lag here included in this data. So now let's have a look at the cycle analysis. So the spectrum chart, that's what we're looking at. And we see one clear peak here with a length of 167 days in the NASDAQ here. And this is an important cycle because you can even go back further in time, and you can even go back to today's situation. You will see that the cycle with a length of 170 days, so a nominal cycle of 170 days, has been appearing in the past and today as a very active dominant cycle on daily markets. Yeah. So, and in the past, this cycle helped very well to fine-tune major swings. But since the low of 2020, we didn't have major swings on the daily chart. We just have the strong uptrend. So this cycle, if you just look at the timing information or what you would do in regards to timing, you would pick this cycle, yeah, and then look out for further turns in the future, which I've just selected here. So this is the cycle with a length of 169 days. And you can see that from the past, this very good pick these key tops and bottoms here. So then this high here, then this down leg, which we see here, was then the sideways moves. So even stopping a strong uptrend and going sideways is similar to this downtrend here. Then from this low to this top, we saw this trend here, and then this top here triggered the crash then into this period, and then this low here helped us to move up to this point here. So this was anyhow the projection moving forward. We can even zoom in a little bit here at this point in time here. So we saw a minor low, and we projected this live here also on the channel, but you see that the trend was so strong that this cycle, which is still there, I mean, you can see it on the chart that this cycle is here. But if you build a composite with a very strong uptrend, and then on top of that trend model a cycle with 170 days, the swings just get wrapped by this key trend here. So the timing information of this cycle has not been helpful, just using this simple method of looking where the future tops and bottoms are. So this is what you saw also here on this channel and I talked about. But now you might ask, so what's then the value of cycle analysis if it won't help us in this kind of a situation? And anyhow, we don't know upfront if there will be a strong uptrend. I mean, there might be other analysis techniques in regards to trend analysis, but the cycle length information here, and this cycle was active even into the future. So if we update our analysis until today, you will see that the nominal cycle with a length of 170, if it's 169, 173, doesn't matter, but you will always see these are clear peak here. What's happening to this? I need to switch to this here. Okay, sorry. This clear peak here in the spectrum. So that's what I call the nominal cycle with a length of 170. Yeah. So the way how you use this information now is you use the length information of 170 to fine-tune your technical indicators. So then let's now switch to the price chart. So and as I said, I will use the NASDAQ. You can use any charting application and any indicator works the same. Last week I used Bitcoin with a different lengths, and today we will use the NASDAQ chart. So I have now chosen the period here. So the same period we saw for the cycle analysis. Here's the low in February 2020, and now just this uptrend on the price chart here. So if you would start with some technical analysis, so let's use the RSI indicator, relative strength index, put this on the chart. Yeah, you would see that this indicator, I mean, basic technical indicators are not useful in general to use alone. You need to know how to apply them, need to have individual techniques, but this goes much beyond this channel here. So the pure indicator and how to use it is not purpose of today, but what is purpose of today? How you can make any indicator based on cyclic information much, much more useful. And therefore, you see the basic RSI would not give us really data. It would have signaled here top, 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 top. Then no real buy signal here. Yeah, so we got lots of sell signals. But no real buy signal here, just using the standard parameter here. So you know that, not really useful. But we could make this indicator much more useful by applying the information about the dominant cycle lengths. Before that, I will switch to a kind of optimized relative strength index. You will find lots of optimized RSI indicator. And optimized, I mean, the line should be more smooth. The channels should be dominant. I don't make any recommendation on which one you use. If you do your research, you will find a lot of optimized RSI indices from different providers. A lot of them are open source, and the one I'm using here is also an open source and free version. So nothing special here. So it makes the symbols more visible. We can use the same period. The standard period of the RSI is 14. And if we use the same length information here, you see more or less same wiggly information, just using the standard setting. But now, and this is what I teach often, is use half of the length of the dominant cycle to set this as input parameter for the length of your technical indicator. Very, very simple. But here, the length of the dominant cycle is key, and you will see how this will improve the signals you can generate now from any technical indicator. So what I will do here is I will now just change the length setting of this indicator, right? So, and this parameter is there for every indicator. You need to define the length for the calculation of this indicator. So this is not specific to the RSI. You will see this for every indicator. And what I will enter here now is 85. So this is just the half of 170 divided by 2. You will get the length of 85. So quite simple. This information is really, really simple to know when you do the cycle analysis, as I've told you and showed you that the dominant cycle of 170 was seen during the full year of 2021 and even before the period started, which I showed you on the cycle analysis, where I used the ending point of February 2020, we saw the clear peak of the cycle with a length of 167. I would anyhow recommend it, round it up to the next higher or lower naming, because it's not important that you have 84, 86 or 87 or 170 or 169. It doesn't matter to fine-tune the indicators. But you see now we have chosen this information as length input now for the relative strength indicator. And what happens now, and I will make the indicator even a little bit more larger here, that you can now observe that the relative strength, which gives you now the short-term oversold signals on this price check. However, we know that, looking back, we know that we have a strong uptrend, and the pure cyclic turns would have maybe misleading or not as exact as we need them. We can see them on the technical price chart now very, very exactly where the real turns happen, even if we are on the strong uptrend. So let's check them. So this is how it works here. For sure, you look for the extreme situations when the indicator line goes above the upper band and then touches down below the upper band, which is from, let's start with the buy signals, has happened, yeah. I selected here now. Okay, here. Yeah, so this is where we saw clear indication about the buy. The next time this happened was here and here and here and go away. Oops. Okay, let's make this, let's highlight this, maybe not with this highlighter here. Let's make this more easy with the arrows here from this interface here. So let's start here with the down signals, which is, my God, I'm not an expert here, right? Okay. Sorry for that. I'm not prepared that well, so that's maybe, yeah, remove drawings, start with fresh drawings, and now we should be able to see right here. So now it works. So the first, at least from the sell indication we saw here at this turning point, I will just mark them on the chart first, and then we can talk about them. So then the next time was here. Then we have seen it, I can even make it larger so that you hear. Then we saw it, yeah, we have, here we have more or less triple, here and here. So then here, and now finally, we got our sell signals here and here. And now let's switch to the buy conditions, which we saw here. Then let's start with these clean ones, which we had here and here. And here, and finally here. And just to add, just as you know, we have a strong divergence, which is seen here from here, and also seen here, right? So you see the divergence between the indicator and the price. So this is also how you read these technical indicators, where even if we don't touch below the lower band, This is a clear reading. And so these are all signals. I've just marked all signals from the pure technical analysis, how you read this technical indicator now on the chart, based on a pure technical indicator. And if you see how you would now swing trade this upswing, only able based on the usage of the dominant cycle, you see that this is how you would trade this information here. So this is the so you would have traded from here to here to here to here, or even this way. So to here, then into this up, into this top here, this low, this top here, short. So this is how you would have been able to trade this strong uptrend now with swings using the dominant cycle. So as I've shown you, I think no basic technical indicator would have been able to help you in swing trading these very, very strong uptrend we saw now during the past full year or even 2 years. And on the other hand, just using simple cycle analysis with the dominant cycle to look out for the major tops and lows based on the cycle time information would also not have helped us. But if you combine two techniques, so trade price, not cycles, but use your technical analysis skills and improve your technical analysis with the input of the length of the dominant cycle. So combining these two techniques, you can see how powerful this technique then will be on the price chart. So even though the pure cycle swings we try to project with the tops and bottoms have not been helpful in the global markets during the past year, the dominant cycle length, which was always visible with this nominal length of 170, and I've not changed the input here. You could even do better with just a little bit of fine-tuning of these input parameter. You see that by the pure reading of the indicator, and I've done nothing special here. You see that it touches more on the point with basic technical analysis skills, the ins and outs. So you could have traded the ins and outs or the swings, even though within this strong uptrend. So I just want to emphasize, and I've used the same method on cryptos last week to show you how the combination of dominant cycle analysis and technical analysis would have been helpful in your or in whatever individual analysis you do on technical markets. So technical analysis is worth a lot, and you can improve technical, and then that's where you get an edge over your colleague, which is not improving his technical analysis based on cycle analysis. And to end the session again with a statement from Dewey always said, if in your framework, in your toolbox, you don't have cycle analysis as part of your toolbox is incomplete. We never tell that cycles is everything. So cycles is a part of analysis, but you should know about how to use cycles in your toolbox. I hope this emphasized a little bit the topic on technical analysis and how to improve technical indicators as we did last week. So this shows you that the same procedure worked very well on the global markets for the full last year. Hope you like it. Please like the channel, subscribe, recommend the channel. Give me your comments to see for next week. Next week, important live session here. So please join us live next week. It will be very important. You can raise your questions. See you there back and have a nice day.